How to trade S&P 500 under pressure. How to trade S&P 500 under pressure. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of this video is How to Trade the S&P 500 under pressure. All right, let's get started. All right, what's happening here? Recently, I have recorded a video about the S&P 500 trading, and I was telling traders that as long as the S&P 500 stays below this orange line, which I'm going to change the color of it now into black so you may see it on the chart. All right. Say to traders, as long as it stays below this bearish trend line, priority to bearish signal. All right, but we can see that, last week the S&P 500 managed to go above this, bearish trend line. It's critical for traders to pay attention to, this event, all right? So the S&P 500 has broken this critical bearish trend line on the weekly chart, all right? So this is one important event that is taking place here. So which means we need to now reevaluate what is happening here and know exactly how we can navigate through the financial market trading around key levels. So where are we now? Okay. The S&P 500 is now on the edge of the median line of the green channel. You remember we draw this green channel. See the green, this green channel, rising channel. Market pattern is bullish. And the price breaks below the median line, which is the blue trend line here. It breaks below it. And was trying desperately to retest that median line. Okay, so remember the language of the price. Break below, retest. All right? Breaks above, retest. All right? This is how you want to trade. Break above, retest. A trend line. Horizontal support and resistance level, because sometimes when we are talking about breaks above and break below, so sometimes they think only about horizontal support and resistance level, but we are also talking about a normal trend line. All right, so the S&P 500 on the weekly chart breaks below the blue trend line, which is the median line of this green channel. Now is retesting, was desperately going up to retest that trend line. Now we are on the edge of that trend line. Okay. So because the market pattern is bullish, all right, and we are also above, this bearish trend line, the bullish momentum is increasing. But as the price is going up, the price is looking for a better resistance level. So we are now at a resistance level, which is the blue trend line here, the median line of the green channel. So we will say to traders, priority to bullish signal only if the price goes above, find the supports above the blue, trend line here. All right. So priority to bullish signal only if the price finds the support above the blue trend line here on the weekly chart. So I will say above, if the price priority to bullish signal above 2080. 2080. All right. If it breaks above 2080 and it finds support, we will give it a bit of chance. But it's not finished yet. Why it's not finished yet? Because if you look carefully here, we have a double bottom chart pattern. Where is the nut? A double bottom chart pattern is a bullish chart pattern, but that pattern is not completed until the price finds support above the nut. This is the nut, this resistance here. So though if it goes above the blue trend line, or if it goes above 2080, there is another resistance ahead straight away here. That's why we are talking about how to trade S&P 500 under pressure. We are under pressure because there is not enough room for the price to go up. So we need to trade gently. In this scenario, it's better to switch into day trading mode. All right. So priority to bullish signal above 2080, but be aware that the NAT is in a zone of 2101. 2101. All right, 2101. So I will also place it on my chart so traders can see it. So I don't want the video to be too long, so I'm a bit under pressure. All right, talking about the time, talking about trading S&P 500. So there is a NAT here at 2101. I like that number, 2101. Okay, going to place it also on my chart. Color it in turquoise. Okay, that's the turquoise line on my chart. I might talk it to myself. Let's zoom into it. So you know what's happening here? So we want to know what is the price doing and where is the price going. So the price breaks below the median line of the green channel and was trying to retest that median line. Now it retested it. Why the price trying to retest it? Because we want to see whether those who sold it below it are serious sellers. If they are serious sellers, if they are robust bearish traders, all right, they will be looking for opportunity to sell it against here because they don't want the price to go above that blue trend line. Okay, so that's why if one wants to buy, when we allow the price to go above the level of 2080, run away from it a bit, and to pull back to retest that level, and if we find a support at 2080, we will give it a chance, okay? A bullish, okay? We give priority to bullish signal if the trend line is validated as a support level, break above, retest. You see here, break below, retest. So if you want to buy here, we want it to break above it and to retest it, and to confirm it as a support level. But right now, all I will say to trader, priority to bullish signal only if the price breaks above 2080, run away from it, pull back to retest it to confirm as a support level. As if one receives a buy signal above 2080, one should be aware of the level of a 2101, which is the NAT of this double bottom chart pattern. Here it is, 2101. And if it goes above 2101, which is the NAT, and finds support, the next target is the red line here, 2134. The price is always going from one key level to the next key levels all the time. So here we are, we break below the blue trend line, we are now retesting it. If we find a resistance here and start going down, I would like to refer traders back to the previous key level that I've already mentioned to traders. So if you start going down like this, okay, from this point onward, I don't want to move any line, start going down, we will be paying attention to, okay, the support level here, 2048, 2038, 2029, all right, 2014, all right, and one more important point, talking about proprietary trading, the current short-term equilibrium price level, okay, remember, the current short-term equilibrium price level for the S&P 500 for the next 2 weeks or so, all right, is at 1989. So if the price final resistance here start going down, the level, the short-term equilibrium price level that we must watch using our proprietary trading tool is at 1984. If one is day trading or swing trading, in the next 2 weeks or so, one must not forget this level of 1984, especially if the S&P 500 is start going down. This is a very, very important level, the short-term equilibrium price level with deviation. If it start going down, which means we'll receive, this is now on the edge of a trend line. So the first thing that is coming to traders' mind is to sell because it breaks below, it retesting. But one should not sell if there is no valid signal using a top-down trading method. All right, so this is where we are talking about how to trade the S&P 500 under pressure. As you can see, the price under pressure, they sold it down, it forced it through to retest the median line. Now it's under pressure to break through that trend line. there is a challenge, because if it breaks above that trend line, there's one resistance, which is the knot of the double bottom pattern, putting S&P 500 under more pressure at 2101. Even if it goes above 2101, there is another resistance at 2134. The market is under pressure, and we will see there's a high chance that the bulls will win and will push it all the way to 2134. In my view, there's a high chance they will continue to drag it like this up to 2134, somewhere around July or August, before we may see a proper bearish action. But this is not an invitation to buy or sell. We will use a top-down trading method on the edge, the price on the edge of the blue line. If it's going down, we are paying attention to the support level below, because the price is looking for a better support level. It will be in a declining channel, all right? And we will remember the level, the short-term equilibrium price level at 1984. Will it come to 1984? That remains to be seen. The final support above 2080, resistance ahead at 2101, is the knot of this double bottom pattern. It breaks above that, all right. The next target is 2134. Remember, the market will become very, very, very bullish if we find a support above 2134. We will see whether it will reach that level. Right now, the S&P 500 is under pressure. So to summarize this video, we are on the edge of the median line of the rising channel. The market pattern is bullish, but the price break below the median line is now retesting it. So if we are looking at a rising channel, the bullish momentum is healthy, so to speak, if the price stay above the median line. All right? But if it dip below the median line of the rising channel, we will acknowledge that the bullish momentum is diminishing. At this point in time, we say it's diminishing because it's now below the median line of the rising channel. If it goes back above the median line and finds support, we will say that, okay, the bullish momentum is now back to normal, and we will give it a chance. But be aware of the knot and the resistance ahead. But right now, the bear will try to force it down, because they are the one that sold it here, and try to push it down. And if it's going down, watch the key level below. And ultimately, for the next 2 weeks or so, watch the short-term equilibrium price level at 1984. It makes sense? It is also powerful. But before I wrap it up, my friend, I have one small thing I want to show you, so you may think of it. I'm going to go to the 2-hour chart, okay? Pay attention to what I'm doing. Remember what I said to you before? There is something that the price is doing all the time. You break above a key level, and we try to retest it. If we find a support, the bullish momentum will continue. If it's going to be bearish, you breaks below a key level and retest that key level. And if you find a resistance at that key level, the bearish momentum will increase. I want to repeat this again so you don't forget it. The price is always breaking above and retesting and going up and down. So you may say to me, George, I heard this 100 times. Have you seen it recently? Okay, there was one here. But I want to add a little bit of touch to it, okay? So you don't want to forget it. That's why I call this video, How to Trade the S&P 500 Under Pressure. I want to give you something so you may also have an edge. So you get a message. Break above, retest, turn around. Break below, retest, turn around. So on the 2-hour chart, we see here, it breaks above this resistance. What it did, it went up and pulled back and retested here. That was last Friday. All right, you see? And retest it here, okay? But I want you to use, if you're using any technical indicator, especially the CCI indicator, all right? If you're using a CCI indicator, you can use CCI period 12. If you see that the price breaks above a key level and retesting that key level, and the CCI form a big double bottom chart pattern, usually that's a high probability bullish trading setup. There's one here, so you see here, breaks above a key level, MSCCI 8 and 12 form a big double bottom chart pattern. Usually, we want to be bullish. You see now how to trade the S&P 500 under pressure. The opposite is also true. If it breaks below a key level, all right, and retests that key level, and the CCI or the RSI form a double top chart pattern, we will give priority to bearish signal. It makes sense? It is also powerful, my friend. So, as always, we learn something in the classroom. We must now go to practice first before we compete with the expert. This is the best way forward. Do not learn from the classroom how to fight and quickly go to fight. You need to go into the ring and test your skill, polish your skill before competing with the expert. All right? Breakable retest. Technical oscillator form a double bottom, a very wide double bottom chart pattern. We give priority to bullish signal. Break below retest. A technical indicator form a double top chart pattern. All right. We give priority to bearish signal. But remember, the economy news can change the dynamics of any technical analysis. So we must combine the technical analysis with the fundamental. This is about how to trade the S&P 500 under pressure. In our case, we are looking first for a trading setup, all right? The trading setup, breakable, retest, turn around, all right? Then we apply top-down trading method, the setup, the signal, and the low-risk entry point. The violation of the top-down trading method is the forbidden trading mistake. If you have any question and you are TST trader, do not hesitate to contact me. And in due course, I will answer your specific question. The price always moving from one key level to the next key level, all right? And if you are just ordinary trader following us on YouTube, put your question in the comment section, and in due course, I will record another video to answer your specific question. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to trade the S&P 500 under pressure. Are you under pressure? Speak to you soon.